Boring.
What do you think? Boring.
Nothing burger.
Nothing burger.
Move on. Nothing to see here.
Zach,
Hey, Chamath, let me ask you a
then?
question. Would you buy a 100-year bond from the federal government?
If I was a foreign government, yes.
What interest would you need to get paid on that to take that on?
Probably 1 to 2%.
1 to 2% for 100 years?
Yeah.
So it would be downside protection. You just feel like this is a secure place to put some amount of money.
This is how any country with a turbulent currency would make this decision. And you could actually get close to zero. I think that when we had ZIRP, you probably could have charged a negative interest rate because you would have effectively been charging countries, third world developing countries, even first world countries that just wanted a protective mechanism against their currency volatility. They would have probably paid you. Just like today, you can get BOJ debt that's negative yielding. So it's no longer negative, but it's still probably in the realm of 1.5%. It's nothing. If you just do the math, it's nothing. And this is why I don't understand why everybody just gets their underwear in a bunch here.
Okay. Non-gender underpants.
Put the red chart up there.
It's like nothing. It's a nothing.
It's a nothing.
It's a nothing.
It's a nothing.
It's a nothing. It's a hockey stick nothing.
Means nothing. I think you guys...
What you see here is an accelerating problem.
Yeah, cut revenue.
The debt is getting bigger and bigger at the same time that foreign governments and investors in general don't want to fund our debt. So therefore, interest rates will rise. Our interest costs will keep going up.
That's not why interest rates are going up.
Well, if they're going up because the Fed is raising rates because of inflation, but at the same time that's happening, foreign governments are not as interested in having dollar reserves and U.S. treasuries.
Said who? As demonstrated by what?
You look at the foreign reserves of these countries, of these sovereigns. They are much less interested in holding U.S. treasuries. Starting with China and all the BRICS countries.
Foreign reserves are up. These guys are banking U.S. dollars like nobody's business.
I don't think so. I think it's been going down since 2008. I'll find you a chart.
Yeah. Maybe from 2008, I don't know, from the great financial crisis at the absolute depths. But what I'm saying is that in general, the anchor currency for governments and central banks has been, will be, and will likely be in the future, the United States dollar. And we get back to the circular argument, which is, I don't think it's possible for politicians to cut expenses. So I am just an advocate for cutting revenue because I do think it's the simplest way to force people. Because the next time they go through these machinations and all this theater around a debt ceiling, they'll just have less revenue to play with. And it'll just become a harder and harder and harder problem. Meanwhile, I do think that you have to take the ball where it lies and take these $24 or $30 trillion and refinance it well out into the future and make a bet on U.S. exceptionalism and U.S. GDP. And if you don't want to believe it, don't fucking be here. Move to some other country where you think it's so much better and go do it there.
But Chamath, what if the market's not there? What if the buyers are not there and you're wrong?
Sure. I mean, you know what? An asteroid could hit the Earth in the next day. We could talk about all kinds of long-tail consequences, but you have to be able to probably weight these things and then spend your time thinking about the things that are more probabilistic and be able to compartmentalize the anxiety of the less probabilistic things. So I think that could there be a scenario where there is no interest? Sure. Is there one? No, because you see every day the government's in the market doing auctions, and there is a robust demand for United States government debt. And until there isn't, this argument is specious. And all I would tell you is just keep trying, put out more, try a 45-year bond and see how it feels like. Try a 50-year. You don't have to do 100 if it makes you too anxious. That's fine.
Let me just ask you, at some point, if the market isn't there, the buyers are not there, then...
Yeah, but you know,
but let's just go through the analysis, because I know that you think it's a zero chance, but if it's as low probability, do you agree that the severity is high? That the significance of that being the case?
I am not going to give an iota of breath to a long tail 5 sigma outcome. It is a waste of time.
Okay.
Because it occupies, and I'll tell you why I don't do it. It occupies my mind share, which takes away from me figuring out how to make money and win on the field today. So I have,
Let's go.
I wake in a 24-hour day. Okay, just to give you a sense of it, I sleep for 8. I'm eating for another 1 or 2, all this bullshit. I have 4 or 5 hours a day of useful thinking time. And I try to think of the belly of the probable. And I try to compartmentalize these dumb long tail sigma events because it distracts me from making money and winning. I actually try to think about long tail sigma events that could make me money This isn't one of them. So I just don't spend time thinking about it. And I could be totally wrong.
Can we pull up this chart?
I could be totally wrong.
Can we pull up this chart?
But it's worked for me so far, and I'm going to stick to what works.
Guys, Sachs has been on Google for 5 minutes. He's got something for you, Chamath. Go ahead.
You should stick to the investing strategy that works for you. I'd like to talk about the status of U.S. Treasuries. So if you look here, this is total foreign treasury holdings as percent of marketable treasury securities. So it's gone down from the mid 50s to the low 30s since 2008, 2009.
As a percentage. So
foreign governments don't want our treasuries as much as they used to, starting with China. They are diversifying into other currencies and gold. And there are a bunch of good reasons for that. By the way, this comes from a blog, which is really interesting. It's a crypto guy named Arthur Hayes. And this is actually a pretty interesting piece called Exit Liquidity. Hayes writes interesting pieces on the banking system and de-dollarization. He's got a little bit of a doomer thesis with respect to the US dollar. Obviously, he's pro-Bitcoin. His views are sort of similar to Balaji's. But in any event, I think one of the points he makes that's really interesting is that if you're to zoom out 30,000 feet and think about the regime that we had during, let's call it the unipolar moment, where China and the United States were strong trading partners and we had this close relationship with them. The way the global economy worked is that China would sell goods to the United States. They would have huge trade surpluses. And then they would take those dollars and they'd use some of them to buy raw materials like energy. That was called the petrodollar. And then they would take other dollars, their surplus, and instead of repatriating at home, they would have to have then converted that money into RMB and brought it home. They didn't do that. That actually would have increased the value of their currency, thereby making their export less attractive. This is why they're accused of currency manipulation. They took their surplus dollars and bought U.S. assets, mainly U.S. treasuries. So we had this trading relationship with China that I think everyone understands the physical world side of that trading relationship, where you had U.S. manufacturing jobs got to export to China. They basically made everything. A lot of cheap goods came into the U.S. They had a trade surplus. What I think people don't understand is that a huge part of that trade surplus was used to finance U.S. deficits and debt. And so you had this like cozy relationship between U.S. elites and U.S. politicians and China, where they got to rack up these huge deficits. The government got to spend a lot of money and China would fund it very cheaply. But now that's all ended. That's stopped because we're basically starting to decouple from China. So China doesn't want to do its business in dollars if they don't have to. Obviously, for the products they sell at the U.S., they'll take dollars. But they're already trying to do as many transactions as they can, buying oil, for example, or energy in RMB.
I don't want to dispute this chart because this chart is true, but it's a small part of how the entire puzzle works. And so this is a Bitcoin maximalist who cherry picks a few data points to try to make a point. But if you look at the IMF data, and I put it to you in the group chat, you can't just look at US Treasury securities. You have to look at actual absolute dollar reserves. And when you look at that over time, it hasn't fluctuated that much. And so for all the dopes that don't understand how this shit works, it's not just securities, it's actually also money. And the actual amount of US dollar money hasn't changed that much.
Gone between 60 and 70% since 1999 on this chart.
I just find this argument, again, one of these long sigma arguments that are anxiety riddled, and I just don't want to waste my time thinking about it because it'll distract me from winning on the field today.
You got to be able to block things out if you want to be a capital allocator. I agree. But an interesting discussion nonetheless.
I don't think these things are just noise. I think you're seeing a trend. I mean, look how many headlines there are about the BRICS countries getting together and starting to transact in currencies other than dollars.
Yeah, you know what? Those are very cherry-picked as well. And you said before you don't trust the press. So you trust the press on these headlines all of a sudden? I don't think that that's actually...
I don't think anyone's disputing the fact that China and Saudi Arabia and China and Brazil are doing energy transactions in RMB.
I think it's very tiny. They're putting all their money into venture capital in the West, private equity in the West, real estate in the West.
Who is?
The Middle East. That's where they're focusing their energy.
There's a different issue. Look, no one is disputing the fact that China and the BRICS countries more generally are trying to create a trading bloc that is not dependent on the US dollar.
I think it's
and they are gradually... That's not saber rattling. It's
I think it is. I think they're trying
to
just let the US know, like, hey, we have other options here. And I think it's China just trying to... It's China on their heels trying to make deals with other folks.
It's China pursuing their self-interest.